Inventory jumped up again this week, but the market continues to show resilience. I'm Tony with Clarkson Santor, and this is our real estate update for the week of Friday, March 21st. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos so you can know how the market is impacting your options as a home seller or buyer. We always like to start with how the market performed this past week. There are now 42 homes on the market, which is up from the 35 we had last week. The average asking price is about the same at $2,202,000, a little bit higher than the $2,184,000 average last week. 5 homes went pending, 3 less than last week, with an average asking price on those pending sales coming down significantly actually to $1,895,000. Down from the $2,149,000 we had last week. And the same number of homes sold this week as last week, with an average closing price dropping a little bit from $2,345,000 down to $2,187,000. So now that we know how the market performed this past week, we like to look forward to the bigger market indicators and trends that can help us know where the market might be headed. But before we do that, if you do find this information helpful, hit the link down below so you can subscribe and be in the know about future updates. And why not share this with a friend also? Everyone deserves to be in the know about their local real estate market. Okay, let's take a look at those indicators. Starting as always with the inventory. It did jump up into our normal range this week. In a neutral market, we expect to see the average inventory hover between 40 and 50 homes. We ended this week at an inventory level of 42 homes, which is, that number isn't high, but it is a trend line. If it is a trend line that continues, we will reach into that higher range, higher than we've seen since summer last year. With the increase in inventory, it's no surprise to see that the turnover rate fell back down this week. We had crossovers into the over 100% mark at the middle of last week, before ending last week at just under 100%, and we're now back down to below the low 70% range. The encouraging news about the pending sales is that the higher priced homes are continuing to go pending. Typically we see in the softer market, the higher priced homes sit a while and the lower priced homes continue to move, driving down our average sales price. But our average sales price our pending sales are still in the close to 1.9 million range, which is good to see. Even with the market struggling to really take off, the over-under number is still holding strong, staying pretty level and above that 0%, or in the over range. Homes have been closing at just over the average asking price for 2 weeks now. They are closing at about 0.5% over the asking price, so it's not a huge difference. But what that tells me is that a home that is well prepared and priced will still attract multiple offers, even in this softer market. As I alluded to in the turnover segment, the sales price continued to increase. Constant trend since the beginning of this year. Usually, when we are working through a slower market like we are right now, the higher priced homes struggle to sell while the lower priced homes continue to move. When that happens, the average sales price drops significantly, like it did at the beginning of this year. Prices are continuing to hold above the $2 million range, and the average asking price on the pending sales number is right around that 2 million range at just under 1.9 right now, which tells me that although it's a little slow, the market isn't as soft as it might appear at first glance. One thing that will help maintain a healthier market this spring is if the tech equities perform well. Fortunately, the QQQ fund had a little bit of a rebound this week after several weeks of value loss. So we had several weeks of declining value, but this past week it did rebound a little bit. The fund rebounded about 2% from the last week's the low of last week. The interest rates bumped up 2 basis points again this week. That is obviously not a huge increase in the rates, but an increase is going to put downward pressure on buyers' expectations. The Fed continued to indicate that they make no plans to reduce rates in the near future, but make promises of 2 cuts this year. We'll see if any of that actually affects the mortgage rates. In the meantime, interest rates staying in that kind of 6.5 to 6.5-ish range is what I expect to see for the foreseeable future. The inventory and turnover rates this week have put a damper on the enthusiasm I was feeling about our market after last week. Inventory is creeping closer to a real buyer market territory, which we haven't seen since last summer. The positive news is that the stock market, and most significantly the tech equities market, reversed a little from the scary direction it was headed in the past few weeks. Combine that with the beautiful spring weather, and we are starting to see that we're starting to experience here in the valley, and we could see a rebound week this coming week. And it is important to reiterate that homes that show well and are priced competitively are still receiving multiple offers and doing so quickly. Thanks for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.